ladies and gentlemen, I have to say, very few ladies and many gentlemen.
As usual.
I did wear a good tie today, but it's all wasted.
I love you, Geza.
This is embarrassing. Can I just say hello to everyone and briefly introduce the panel here? We would like to talk about Germany and German retail today, but we don't want to do this alone. I would very much like to encourage you to be a participant in this discussion because we have only prepared 5 minutes of talking, so you need to do the rest of the talking. Please do ask questions. We will ask you questions for sure, but do see this as a dialogue. We don't want to sit here by ourselves and just talking about how great we are in our deals. Quickly, my name is Geza Toth-Feher. I have to my left Stefan Zimmermann, who will say a little bit about himself. Stefan, if you just want to say something.
Yeah, actually, I'm one of the two managing partners of Acrest, a German retail specialized asset manager and developer based in Berlin, with, as of now, some 3.7 billion assets under management.
Oh, that's it. That was very short. Yeah. Then I go to the far right without this being any political view. It's just the location at this table. We have Stuart Reid here from Rockspring. Stuart, words maybe.
I'm an English guy who's lived in Germany now for the last 22 years somehow. Rockspring has some 7.3 billion euros of asset under management across Europe, with 1.25 billion in Germany and Switzerland. So Germany is for us the second most important market. And in Germany, we've been focused on retail for a number of years now.
Thanks, Stuart. And then I have, to my very right here, I have Nick Fox of Europa Capital. Nick?
Yep, I'm a partner with Europa Capital. We have been together as a team since the late 90s. We have about 4 billion euros under management, a significant part of which is retail. And a significant part of the program has been in Germany. I too have lived in Germany, though not for 22 years, and I saw my exit in the late 90s, but happy to be here to talk about retail.
Excellent, thank you very much. And if I should maybe say a few words about myself as well. So my name is Geza Toth-Feher. Despite my not very German-sounding name, I am German, and I lived in London for the last almost 20 years. And before that in Germany, the 10 years before that in Germany, since my birth. And I had run a little arrangement firm called CB Equity, which actually specializes in arranging and co-investing in the shape old school merchant banks would have done in German transactions, and we very much like retail deals. I think we have Charles from REFIRE here, who sits in the first row, just in case somebody hasn't seen him yet, photographer, then has given us a few topics to talk about. We all think, I think, across this panel, that retail is pretty exciting. It has had its cycles. I want to throw off a question to start with. Someone very famous, or at least very visible investor in Germany, who is referred to sometimes as the homeless billionaire, Mr. Berggruen, characterizes himself as an investor and philanthropist. So the question to the panel is, to invest in Germany, do you have to be investor or philanthropist? Is there money to be made in Germany, or is it all overpriced? Stuart, what do you think?
I've got to be very careful because it's been described that Berggruen actually didn't pay more than €1 for the Karstadt stores, which he's trying to trade on at the moment now. So one's got to be careful about the amount of money that one's actually putting in. And I think what's very interesting, what's been touched on today, is actually where we are in the market now against where we were in 2006, 2007. 2006, 2007 was a highly leveraged, debt-fueled boom, which led to some very high pricing. Now I think although the debt is coming back, I think we're in an equity-driven period, but we've gone back to some of the same pricing. So I think we've all got to be a bit careful, and it really depends. Do you want to be an investor? Do you want to be a philanthropist? Is it your money or is it somebody else's money? That's the first question.
Nick, anything you want to add?
Yeah, sure. one of the major brokers stroke advisors with European presence was in our office this week, suggesting that Germany was becoming overheated already, and that we were back to a 2007 mindset. And an institution, a German institution, told me they thought that Germany had peaked. And I believe neither of those things are true. I think coming back to the point about can you make money out of retail, we've talked we've seen on previous panels today about the importance of asset management and the importance of financing and structuring one's finance well and prudently. But frankly, I think the two keys to success in the retail world in Germany are probably overwhelmingly to buy well, and secondly, to have the management infrastructure that enables the business plan to be implemented. But buying well overwhelmingly must be the key.
Stefan, buying well, you do a lot of asset management for Cerberus Group. Have you bought well? Are we seeing a bubble? What do you say?
Actually, I would say knowing if you bought well is not a matter of Excel. It's actually finalizing the deal and getting money into your account. So honestly, I can say stuff which we managed since 2007 or 8 from clients of ours, they made decent money on it. If we make money with the current deals, we believe so, but we will know in 3 to 4 years from now. I wouldn't say that, actually, and I agree fully with Nick, I wouldn't say that the market is overheated. We see obviously tendencies getting into such a market, and obviously being homeless helps because the tax authorities do not know where they should send the invoice to. That is something I think most important is that you do not start setting structure above the real estate. So it should always be the underlying value of real estate. And even if you are able to buy an NPL portfolio for whatever, 10 cents on a dollar, it could even be too expensive.
Historically, when somebody would talk about real estate, and I would encourage you to maybe say something about it, there would be two types.
One question. Where do you see the growth coming from? Yield compression or rental growth?
It depends a bit. Depends on market.
Buying well.
It's obviously you could go in certain markets. I think there's a market disruption where you could play the yield compression game because we see such a hell amount of equity coming into the market, and I do not believe that we will have an interest rise in the next 24 months. So there's a pressure to invest for a number of groups, and you have certain markets where just competing parties are leading to rising rents. One largest example are hypermarkets in bigger cities starting from 250,000 inhabitants onwards.
I think to go back to yield compression, maybe I personally always believe in this. This is what we have said is betting on yield compression is a little bit buying hope. And I think it goes back to buying well. I think you need to make your money going in because you never know when you exit and how you exit, and sometimes you exit far quicker than you think and far worse than you think. Let me just, because I know you're very keen to ask questions, and all your questions will be answered.
Sorry, I just want to understand it. I mean, if you're saying buying gold, then okay.
That means cheap.
Yes, thank you very much. Even from Germany, I understand it. Right? But now, then you're more or less saying that there's special opportunities. So you wouldn't say that the broad market is right to just say there's some pockets, so to say, where you could make money, but in the general, you would say the market is overheated.
Sure. I think I can answer the question. We've heard a lot today about yield. In fact, I think the predecessor in this seat said, "What's money?" And he wanted to know money. I think what he was saying is money is when I get my money back, and that's my equity multiple. And the American view, I want my money back after 6 or 7 years. And we've heard a hell of a lot today about yield. I can get yield, whether it's 5% unleveraged, whether it's 6% leverage, and so forth. My opinion on the market in Germany is always, if you want to outplay that market, 5, 6, 7% market, the income market, with or without leverage, depending on how the banking markets are, you've got to asset manage. You've got to move the asset from non-core to core, or from value-add to core plus. Then you get your yield compression. But if you don't move the asset class, you won't outdo yield.
which also means if you do not manage it properly, your value decreases over proportionally, and that's different to resi. You know, if you have a good or bad property manager in residential, you have a good location, it doesn't matter. If you have a bad asset manager for your retail stuff, it does matter.
Your tenant will leave, and we all know what that means.
And I think we have to look at risk and return here. Stuart and I are both in spaces that are not necessarily the same space, but we're in the value-add opportunistic space, maybe even 4+, maybe lower down the risk chain. The point is that we are not buyers of core property. We're not buyers of perfect property. We're not buyers of 100% stable income stream. We are hopefully creators of it. So we're looking to, and I'm not speaking for you, Stuart, but we're looking to find opportunities which can be bought at a sensible basis, which through an aggressive and well-managed program can create yield compression, which is then justified by creating a better enhanced income stream, a better tenant mix, something that was illiquid becomes liquid, something which was hardly financeable becomes eminently financeable. That's really what I'm getting at.
I think to add to this, I think the best way to describe it is probably every mono-focused view to say I go for yield, I buy yield, is in principle can't be right, because you can only buy yield in relation to a certain risk assessment. So saying I buy on a 5% yield can be good, can be bad, can be really a transaction no one should do, because you buy an asset that nobody should buy. It could be an asset that is actually sellable at 3% yield, could be good because it has no risk. But I think the discussions you hear, especially when there's a very testosterone-driven discussion alongside Expo or MIPIM, after a number of deals, the yield discussion becomes the numbers get bigger and the deals get smaller. It's amazing. You would expect.
And that's before the banks come in the room.
But what I want to say, can I maybe pick up on this thought I had earlier? When you think about retail, why would retail be interesting? Historically, you would say because you have usually long-term rental income from at least an anchor tenant, or in the event of a single tenant, you have a good covenant in Germany from a grocery-anchored retailer or a DIY retailer or alike, and you can look at a very easily financeable product with a long-term income stream against which you could historically finance at a decent LTV level for a reasonable time period. Do we think collectively that the availability of debt financing is back to levels where it was in 2005 to maybe July 2007, or are we really saying even though you have a good anchor tenant, and even though you may have 10, 12 years lease or 15 years on the clock, you would still run from Pontius to Pilate, so to say, to get a decent level of debt funding? What are the experiences? Is there anyone in the room who's financed retail at an LTV above 75%? For instance, I'd like to know if somebody did that.
Senior or?
Senior. There was I saw it.
We should start actually. Did anyone bought retail this year?
Yes.
That's so. Yeah.
Did anyone else buy retail? Is anybody intending to buy retail this year?
There's less competition.
I mean, perhaps one way to answer that question is I think we're probably all agreed the senior debt up to 60% is definitely there and readily available to borrowers who've got a track record. I think, let's go back to 2005, 2006, 2007. And I'm sure Nick was in the pub in Hanover Square, Berkeley Square, and every other, Smith, Jones and Harris could get on the plane to Germany, pick up the first or second portfolio he saw and finance it at 75% without any historical track record in the country, indeed without any record in the country.
Without any team?
Jones Lang told me in 2003, 2004, they had 40 foreign buyers on their books. They told me in 2007, 2008, they had 400. Now, those 400, the 360 or so, had got on that plane and borrowed that money. and then probably refinanced at 100% when they came out of the notary. Those days are not there, Geza. Thank God.
And actually, biggest problem was at this point in time that we all didn't have enough shitty real estate which we could sell to this actually stupid money and make decent returns.
We're not old enough.
Yeah.
Next time.
At least I am.
All right. So basically, to wrap this up, we're basically saying there's decent debt financing there to a level of 60%. Is of course historically cheap. We ourselves are trying to go very long for financing, even up to 10 years in certain instances, which actually at least allows you to not be cornered by a bank and not be caught out by the market at the worst time, which is normally your lease expiry coinciding with the debt expiry.
What we do see is actually that, again, the market is very diversified within the different retail sectors. So for good shopping center developments in decent locations with some 50 to 60% pre-lease, 75% LTC is not an issue. And you could also layer an additional 10 to 15% mezz on top of that, because it's like the highest demand in the market. If you go to east of Germany and you want to finance a DIY store with a REFIRE credit, even if this has 15 years, actually it's quite tough to get a 5 times multiple or 5 times LTV on the whole transaction. So there's a huge market disruption because actually banks go alongside with the seller, which I honestly not always understand.
I think one of the things I don't understand that either. One of the things that also are important when we talk about yield as a percentage price to income. I think sometimes we forget that yield, that price is also a function of square meter rent, square footage rent, and I think the discussion where rents have actually moved is much more important than the factor. The multiplier. So often you hear again talk about how many times rent or how little times rent people have bought at, but the underlying rent. There's a question, please.
The logistic guys are quite enthusiastic about the online shopping, e-commerce. How is the enthusiasm on your side? Thinking about yields and rents and production of areas.
That's a very good question.
Let's put the question around the other way. Hands up, anybody who's not online. Hands up, anybody who's not bought. I'm not talking about air tickets, rail tickets. Anybody who's not bought electronics or fashion, or anybody in the family in the last couple of months online.
You said in the family, you spoiled it.
No, come on. Online. We've got one lady. She's bought nothing online.
Not true.
I know her in person. I don't believe her. No. I don't believe you.
Not today.
Okay, well, that's
you meant not today.
the old English saying that one swallow doesn't make a summer, or something along those lines. Well, I think the question is extremely important, because there's no doubt that if we close our eyes and stick our head in the sand, we're going to get rolled over. Because the internet is there, and penetration of the internet in Germany, I think, is one of the highest, perhaps after the States, after the UK, but it's one of the highest. I think Estonia is in front, but Germany's right up there with something like 85% penetration. And certainly since 2000, internet sales have gone up by 500%, and last year alone they went up by 25%. Question is, what does that really mean? Am I afraid that Nick is sitting here as an investor? Well, no, that makes us more competitive. You know, retailers, brick retailers, got to respond, and they've got to find a way to, deal with the turnover, which is definitely being taken away from them. We all know books, toys, music, electronics, they're already at 25% plus of German turnover already. What does that mean to Stefan or Nick or I or any of us in the room? It means if we see a MediaMarkt or a Saturn anchored shopping centre in a 50,000 population town, 15 to 20,000 shopping centre, we ain't going to value that Saturn or MediaMarkt unit, at full value.
We bet and we hope or we hope, not we bet, but we hope that Primark actually targets 50,000 inhabitant cities in 3 years from now.
And takes that
and
space.
solves the issue.
Yeah.
No, it's actually, it's a very good question, and it's a real risk factor for a number of different branches. Nevertheless, what we shouldn't forget is most of those companies who scare the market aren't profitable. So someone like Zalando is not profitable. Someone like Amazon is actually growing and takes market shares, but made a loss last year. And those companies are valued on incredible, negative EBITDA multiples. Nevertheless, taking Otto Group as one of the biggest and old heritage mail order chains in Germany and Amazon to Geza, both control more than a 50% market share in online retail. So that's something which is actually quite scary. But you see, what we say always, any trend has a counter trend. So as online retail grows, online retailers see, we need a direct link to our customers. So someone like eBay presented a pop-up store last year, shortly before Christmas. Zalando, with their officially published 60 or 65% return rate, now opens up outlet centers on real estate side, desperately looking for space in bigger cities with 500,000 inhabitants in the catchment area, because it's just not worth to take the stuff. And, not everyone is just wrapping and packing it right. There are people who wear clothes for a number of days and then send it back. And just to get this being back sorted into the logistics stuff, being it freshly hanged and ironed and whatever, costs a fortune. And that's why those people are not profitable. And the offline retail obviously needs this link, and they need to link the online and the offline world. But we shouldn't forget, and that's why I think shopping centers, at least at a decent size, will have quite a good time the next couple of years. There's an emotional effect. There's a social component in shopping, and people use it quite often. You maybe came across the social cam stuff in the States, where Forever 21 has the locker rooms with a small little webcam inside. You can log into your Facebook account. I don't know. Whom of you has a Facebook account? Oh, okay. So who not shouldn't invest into retail because you can't judge what the market will go to. So you log into a Facebook account, make pictures of yourself, and ask your friends how you look like in that. And then actually that's quite interesting, because they save money for personnel, because you effectively need less staff on the ground, because you do not need to advise people, and you have this link between online and offline, and that's quite interesting.
But the good thing about a Facebook account, if I can say this, you only publish pictures of yourself where you look extremely good, and that I think
actually,
unless somebody else publishes a picture of you on Facebook, which of course may have a different effect. But I think
that's why
this is the 5.
I'd like to put another side to this argument, though. I totally agree with Stefan. There is a very important social aspect to shopping, which will probably never change. Big statement. But I attended a CBRE conference recently where one of the guest speakers was an expert in internet retailing. And he astounded all of us, I have to say, because I thought my wife was a reflection of shopping patterns and she buys everything online. Thank God she works for a living. But what this speaker told us was that just in the UK, and we have to be careful to make comparisons, but in the UK, just 9.8% of retail turnover is on the internet, and it's falling. So we mustn't get carried away with this fear. I think Germany is probably slightly behind the curve, and therefore may still be growing, but from a lower base, and it may peak at a similar level. But shopping will always be a social habit and a social pleasure for some, and it's not going away.
Some sectors will get hit much harder, and have already been hit, and will stay hit much harder than others.
I think I was going to say, there's a definite. I think it depends very highly on what products we're talking about. For instance, I am invited tonight to the Louboutin shoe sale preview event because my first name is female sounding, so I do get invitations for shoes, fur coats, female underwear, all these kind of things. And I tell you, the social component of these shopping events is very high. But
can we talk about Aldi and Lidl now?
But exactly, coming back to the more
Geza, happy wife, happy life.
But who would buy a lawnmower in a social event? I think there are sectors or subsectors in the retail sector which might be affected more than others. I do believe that food, for instance, if you look at Waitrose and Ocado experiments, it's not as profitable as anyone expected.
It's loss-making.
It's loss-making. But a couple of years ago, the prediction was that no one would go to Waitrose anymore. Effectively, all stores would close, and no one would do it. So we've seen this. Germany is indeed a bit behind this curve. At least that's my feeling. Wandering between Hamburg and London, I always feel London is more advanced in online shopping than Germany, or maybe it's just Hamburg. But a fact is the AXA in their latest report say that only 1/3 of German retailers have an online presence so far. So that is still a big number of retailers to maybe decide otherwise. I think the biggest concern I would have is it's so much easier in military terms. It's really the aircraft carrier versus destroyer, because you're so much faster in moving your online presence and adjusting it to a client's need or perceived need. Whereas if you have to remodel your entire store, the capital expenditure is much higher.
But I think one of the interesting points, and I come back to this point about competition. There's always been, especially from the foreigner's view of Germany, the Germans love discounts. They hate to pay the margins. Aldi, Lidl, stack it high, sell it cheap, so forth. But there's no doubt that these retailers are seeing or knowing that there will be an impact of the internet. And I don't know if anybody's been into the latest Aldi stores, the latest generation, which is probably only the first 2 or 3 have been built, Aldi Nord stores. They are fantastic. They're almost up there with a DM or one of the new Edekas. And we've seen the Edeka stores in the last 5 years, the Rewe stores in the last 5 years. They have become shopping experiences. You go into a Rewe store now, it's sort of 4,000 square meter, 2,500 square meter store. You see the fresh fruit, the vegetables, the lighting is good, the music is good, it's clean. You don't see the pallets anymore. And that is all competition against each other, obviously, but against the internet as well. And that's reaction. And that is good news.
Plus, there's an attribute of good design goes alongside with good quality. The best example is Vapiano. Crappy food, but fantastic design. Actually, right. Actually, it's you queue up. You do not have any social event because people are queuing up in different groups. And actually, then once everyone arrives, your pizza is cold, and actually the salad is like half eaten. But it's good design, and people just love it.
And it's an experience.
And
it's not just buying.
Exactly. And actually, Germans love Italian food, so that's why the Asian concept didn't work. Besides, they tried to grab the same concept. And we shouldn't forget that everyone within this room is not a customer of our normal shopping centers. That shouldn't be forgotten. Actually, our normal customer is the trash TV looking guys, being at least one part of the family being unemployed. Because those you're all earning too much money, and you're all too well educated to perceive what happens with you in a shopping mall.
One can never earn too much money. It's impossible.
Thanks, Gordon Gekko. No, but it's that shouldn't be forgotten. And there's a growing group within Germany who especially needs this field of discount retail, where people just can't afford going to a Peek and Kloppenburg. They need a kick where they could get like full closure from socks up to a jacket for some 30 quid. And there are pretty weird people around Frankfurt on the investment banking side who are making these kick parties. And whoever has spent less on a full closer doesn't have to pay for the night. So, but there are a lot of people who just need it, and actually everyone within this room is just a different client. You guys are believing on those organic promises within the supermarkets, and actually you love to have tailored shirts and tailored suits because that makes you different. You take this as an example for giving yourself a present, because no one needs the 50th shirt in his hanger in his closet. No one needs the 10th suit. It's just because you feel you need to do something good for yourself.
Well, I think to go back to this discount, I think this is an interesting topic, the discount topic. I think we've seen breakneck discount policies in the DIY sector. I think is a good example. Are you tired, or is this a question? Am I boring?
It's a better effect if you let people stand up before you start.
DIY sector, back to that maybe, and that goes into one of your lines, Charles. Were there mistakes in the retail sector? I think we've seen an insolvency this year in Max Bar and Praktika, where especially on the Praktika side of things, the discount policy, in fact, was taken to the far end, where I think if everybody may or may not be aware, Praktika have gone to a practice of having 20% off days, and then 20% off weeks, and then 20% off months, and now I think we're at this 80% off quarter, and it went so far that the company simply couldn't make profit anymore. So that led to a discussion about whether or not the retail sector, DIY sector as a whole, was bad, whether there was too much space available, and in fact whether the per capita square meter in retail space in the DIY sector in Germany, why was it 3 times higher than in Paris? Why not? Because maybe Germans build more. I think this discount culture also moves away from the people who really either couldn't afford and they really need to buy it so cheaply to a discount culture of luxury products. In the online sale, that what we see, and I'm being very swamped with personally, but I think many people, is this peer-to-peer network selling, where people are on the internet. Is your friend who recommends something to you, your friend gets points or a discount, you get a discount, and then you recommend this on to your other friends, and they get discounts on Louboutin shoes. I'm talking shoes here, but this could also apply to luxury goods as travel. It works in the travel industry. It works in shopping. It works in clothes very well generally. In food, it doesn't seem to work so well. But I think the breakneck discount policies, that's probably all.
Yeah, I mean, the next question, I mean, we've got these 25% in books and media and so forth. The next question is what's going to happen in food? At the moment, I think it's plus minus 2% in Germany. And we know that Globus has got click and collect. We know that Famila up in the north has got click and collect. We know that Aldi and Lidl are not going there. I would suggest that the spread of food, discount food in Germany, is extremely wide. And there are very few people in Germany who live more than 5 minutes away from a Lidl or an Aldi. And therefore, the convenience is almost there. It's not so inconvenient to drop by the Penny or the Netto. There's that fact. There's also the fact I've read up that the margins on that food in Germany are so slim anyway that the businesses are only making a 1% profit on turnover, plus minus, that they actually can't afford to go into the logistics of click and collect and delivery and have all the deliveries not being delivered and so forth, because you've got to subsidize that for 4, 5, 6, 7 years in order to break the market, and none of them really want to go that way. I don't know if anybody's got any thoughts.
Plus that Germans do not believe that they get the best tomato which they would choose by themselves if they stand in front of the supermarket in a shelf of tomatoes. And Kaufland had this test round that people standing in front of the cashier and just bagged the stuff. Everyone knows it from the States or over here.
Yeah, they didn't want it.
And no, people didn't want it. There were like people who had retired who took their stick and tried to beat the guys and said, he is stealing my stuff, because people just don't want that anyone else is touching the stuff which he just paid. So if it runs through the cashier, it's mine, and no one else has to touch it, and I have to choose it. Plus, and actually that could maybe give some additional percentage to your 2%, until, I don't know, 3 months or so, we didn't have same-day delivery in Germany. We just didn't have it.
I think same-day delivery, I think, is a bit of the key, and that's also the cost driver. Because what's the point? At least if I want to go shopping and I feel like eating mozzarella, I want mozzarella now and not in 2 days. And then I go to the shop if it's not raining. If it's raining, then you don't go to the shop, although the shop is around the corner. And I think that's the convenience factor is there. But who lives in Germany out of the audience?
Okay.
So who are the German online? Where can you buy grocery in Germany online? From Aldi?
You can buy actually from Rewe. You can buy from Famila. You can buy in Berlin.
Who has bought online groceries from Rewe?
From Kaisers in Berlin.
Kaisers. Rewe? Who's bought Rewe?
Online purchases.
Online.
Click and collect, or they deliver to the office, presumably, because you're a lawyer, so you work 24/7. At home. And who's at home?
It depends.
That's why you got kids.
So we have one person who's shopped online, grocery.
Pretty clear there's a difference between Germany and the UK in that the German Hausfrau buys ingredients. In English, pizza.
You're absolutely right. The level of pre-prepared penetration, if I could call it that, in the UK is enormous compared to Germany. I think it's sort of 25-30%.
But that turns a lot. The latest generation in Germany, so the mid-teens to mid-20s.
So the housewife 2.0.
That's actually more the houseman 2.0, because they don't find any women anymore. Go into a situation where they really love to buy all this pre-cooked food, and the most absurd thing I have seen on property tours within this year was a peeled banana. So peeled banana, you know this like black plastic boxes where you have all these fruits, pineapples like shaved and whatever, and there was a peeled banana.
In Germany?
In Germany. I was, what the fuck? What is that?
It's a peeled banana, Stefan. It's a peeled banana.
Yeah, but why to hell does anyone sell that?
A woman
service.
So in Hong Kong, as you exit the subway, you can click your apps, and it's at your doorstep by the time you get there.
Yep.
How much of that stress or discount is incorporated in your model when you buy retail? Is it just you buy it cheap enough and you factored in that risk? Or do you say it's not going to come in this market for 5 years? For 5 years, I'm not going to put it in my discount model.
No, actually, it's a combination or formula between location and price. And one of the reasons why it works in Asia is because delivery is so extremely cheap. You have all the small motorcycles who really deliver the stuff once you are in front of your door, which will never ever work out in Germany, or I would say in Western Europe due to the unions. Never ever. If our German chancellor speaks about a minimum salary of €8.50, that would blow up the margins. So that's not the real risk. The real risk is if you buy today into whatever a remaining 7 years lease term of a supermarket somewhere in a city in east of Germany who has some 5,000 inhabitants as of today. And those 5,000 inhabitants going to be served by 7 different supermarkets and discounters. And those 5,000 people will be 1,500 in 10 years from now. And the reason why the rent is at €12.50 is because the former owner and developer paid everything in fit out. So it's an investment rent of €4. So your nominal rent should be €8.50. And taking into account that it's like a third less people in 10 years from now in such areas, you could be pretty sure that only 1 out of those 7 will survive. So this needs to be factored in. If I would go and price such an asset, I wouldn't pay more than 4 or 5 times.
But I think to add to this, in Hamburg, in Germany, there's a saying that whatever real estate you buy, there are only three rules you have to observe: location, location, location. That applies to retail, to residential, at least in Hamburg, and to office. And I think that's pretty much what you're saying as well. I think in terms of risk factoring in, Germany has also a wonderful lending valuation rule, which effectively forces the mortgage banks to apply very particular risk criteria when determining how much they can lend against particular property. And that is largely what in Anglo-American terms is a VPV. It's like the vacant possession value. So they don't really look at the lease or whatever you have there very much, but they look at the outlook for 10 years and say, what, as you say, in 5 years, if the retailer closes shop, what's happening then? Are we having the local Audimax, or what have we got? That was a question.
Two questions. We've got two questions. One is, if the margins are so thin in Germany for food retailers, yet in the UK the food retailers are able to operate this collect and the online market, is there not a huge market for the German retailers, excluding Aldi and Lidl, food retailers in the UK that haven't tapped into yet?
If you can get the planning permissions and enter the market, that was Walmart's problem in reverse in Germany. You can't get it, you can't get exposure.
Well, this one, the labels and the editors that are going here.
They do actually. They do that. The Lidl, for instance, are in a rapid expansion program because their retail margin in the UK is much higher than what they currently achieve in Germany.
My understanding, Tristan, was that in the UK we've always been operating off margins of 1 to 2%. So Tesco, Sainsbury, Waitrose, etc., very low margins. And when I was living in Germany in the early 90s, the margins there were 6 to 8%. And I think that the margins have been crushed by competition and so on. And maybe online retailing is part of that factor. Where you go from there, I mean, I can promise you that if you ask Ocado and the other delivery services whether they make money, they do not make money. They're purely buying loyalty. But it doesn't make any money.
The other question is, we haven't really touched on it, is really factory outlet centres. We're talking about the discounting and Germany's idea generally, and they've obviously got a long time to get outlet centres going in Germany because the opposition from unions and local authorities and everything else like that. How do you see the market outlet centres going forward? Now there appears to be quite a lot more getting consent and being built.
There's no market. There's still no market. I think we have in total some 10 factory outlet centres across Germany. And there's now permission being granted for another 3. I wouldn't call that a market.
That's versus, just to put it in perspective, versus something like 400 shopping malls.
Yeah, we have some 412 shopping malls across Germany, and obviously factory outlet center is always a topic which pops up if you go into reconversion of a shopping mall which is outdated. As long as the local retail councils are so strong that they are able to protect the inner city retail, it will be pretty tough to get zoning. So actually the average, takes the other way around, the average zoning for a shopping center in Germany is 7 years. 7. From like first contact to construction start and 10 to opening. The average time for a factory outlet center from like first day of acquisition up to construction start is 15 years. Plus another year and a half of construction. So that's literally, if someone would come alongside to us as a company and say, build me a business structure around factory outlet, I would probably take him to Poland. But I wouldn't wreck him and do it in Germany.
I have a different view. And I wouldn't I? Because we have one of the 10. But what I think, I don't disagree with you, Stefan, that it will always be very tough to pull off in Germany. I think for good reasons, which is one reason why we like the German retail investment market generally, is that planning controls are observed generally, much more so than in many other territories. We have bought into the outlet centre in Wolfsburg, where we're now the controlling owner, partly because it's already there and therefore consented. In fact, we've just finished phase 2 and phase 3 is already consented. So I think there is a market, and I think there's increasing institutional interest to one day take us out of that outlet centre. I had a bet, though, with one of our partners on our Fulham Stieglitz deal, who he personally used to work for MacArthur Glen. He thinks there'll be 30, it wasn't Steve actually, he thought there will be 30 outlet centres in Germany by 2016, I told him not more than 16.
NFW.
And we have a bet on that. But I think the appeal of the sector to us is the fact that it's limited in supply, incredibly tough to pull off. It's obviously not just planning; it's the retail trades unions who are up in arms about it in principle, often for the wrong reasons. Ours happens to be the only outlet centre I know anywhere in the world which is in a town centre, which is quite extraordinary. But it works very well.
There's no retail in the city.
Well, I think Porsche Strasse in Wolfsburg,
it did recover.
This is 40% of the town is employed by Volkswagen. It's an unusual situation, but Porsche Strasse, which is the Fußgängerzone in Wolfsburg, will recover, probably in a slightly different way. And by the way, ECE owns the centre at the other end of the street. You've got to believe that they'll make something happen, to allow the street to survive.
No, but actually, going back to the competition in Germany in relation to food retail and discount, we made some research and took the 100 largest cities in Germany. On average, there's a food discounter every 678 meters. So it's extremely dense.
That's so long.
In Louboutins, yes.
Do you think, Stefan, in 10 years' time, when those leases have fallen in and so forth, there'll be 2 out of 5 empty? Or do you think they'll negotiate the rents down and survive?
No, I think really there's a risk of having vacant assets, especially if people do not manage them properly and they get teared down and whatever. But there will be new concepts coming up to the market, as done 6-7 years ago with Kick, who then expanded in Germany with some 1,500 stores and just taking it over at very little rents. So you face a real risk of having a huge decline in value if you buy too high. And if I hear at Expo that people start buying retail parks in Landsberg with the remaining 6 years WALT at 6.5 times. I feel a bit like back in 2005.
Yeah, I think so. So to summarize this up, I think the risk, the downside risk you were saying is much higher because the decline in rent will be like falling off a cliff. Really, I think we've seen a little bit of this in the wake of the Praktika insolvency, where effectively a landowner as big as RBS, or de facto landowner, had to play insolvency administrators' games. For about 6 months, with an insolvency administrator sitting on a retail share that owns nothing and sits on leases and pays nothing, and yet sits on the assets and becomes a huge nuisance to the owners. And in fact, now, as you know, the competition is surrounding the situation, and they're offering to operate the assets for operation costs. So at least you don't have the downside of having to heat and light and maintain properties, and if only to avoid somebody else getting it.
No, that's right. Actually, you see, that's what I said earlier. Retail assets, if they aren't properly managed, and if you do not do a proper research and underwriting, decline over proportionally in value. If you have a B location office somewhere in a C city, you're still able to convert this into resi. If you have a DIY store in a B location in a C city, we have such a bucket within our portfolios which is called no idea what to do. Thanks God, they are very little. It's a very little bucket, but actually I would shift that into this bucket.
All right, but I see here from the program that we have to make way for 5 of the best, as it is called, and this is.
To digitalize it. It's actually almost a graduation of some of the arguments that we've been touching on here.
Okay.
We're going to look at the whole development of the digitalization of the German real estate industry.
Okay, so we were the 5 of the best. We were the 4 of the best. And okay. Thank you very much for everything. If anybody,
I think the main question is, where are the loos?
Okay. Thank you very much for your attention. Thank you.